Was it wasteful spending or was it consumer protection? Did they do more harm than they did good? They is the Consumer Financial Protection Bureau, aka the CFPB. And as we sit here in the beginning of 2025, their website has been shut down, their funding has been cut off, and all activity has been suspended. Will this be great for the mortgage and real estate industries? Or will this lead us down the path for another financial crisis a la the one we had in 2008? And check this out. We want to hear from you. So if you haven't done so already, make sure you are commenting on our YouTube channel and have a healthy discussion on the future of this industry, our country, as it pertains to the CFPB. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC
John Coleman.
Yo, what's poppin'?
Oh, I can tell by that green Nike runners cover up. That's what that is. It's a runners cover up that you obviously are excited about the Super Bowl LIX outcome.
Oh.
Yeah.
The game was trash.
You're wearing Eagles green, dude.
No, this is my new uniform. Just like I wear like the all black hoodie all the time. Now I'm going to wear this for the next 3 months on the podcast.
Okay. You said that game was trash, by the way?
Yeah.
You didn't like it? Is that because you're a Chiefs fan or just because you're
No, because I'm a competitive sports watcher, not even fan.
Okay.
And that was those cheeks.
I loved it. And I'm not a hater, but I love the fact that the refs couldn't even win it for the Chiefs this time.
The commercials were shitty. The game was shitty. Everything about it was shitty.
Well, look, I had a great time. My son came over. His girlfriend came with him. My cousin came over. We grilled burgers and brats. So you're one of the people. Yeah, you're one of the people at the end of the cul-de-sac. You had a cul-de-sac party, didn't you? I did not. No, I did not. You know what? I actually don't like having the neighbors over for Super Bowl because I like to watch the game and listen to the commentators. And you get too many people in your house and they all want to have conversations outside of watching the game and listening to the commentators.
Tom Brady did not deserve to call his Super Bowl in his first year. He is a trash commentator. Shout out Tom. Tom, you're my boy still.
I am not going to disagree with the deserve aspect. I felt like compared to what he did all season, he showed up for the occasion.
Bro, he needs a couple more reps under his belt. Get Greg Olsen back in there. And that's saying something.
I'm not going to disagree that Tom Brady is a newer sportscaster. He did better than Terry Bradshaw did doing the post-game interviews.
I don't know why they fucking parade these old men up there trying to hold on to something that was long past.
You know, I think that sometimes with our own industry. And then I'm like, you know what, Dustin? You haven't reached that ripe age of 65 or 67 or 75. Maybe I, too, am not going to want to shut her down because maybe I, too.
No, if you reach 65, go somewhere and sit down. Go live in the villages. I got a plug up there. I'll connect you quickly. Please go somewhere and sit down.
Yeah, no, I'm excited about today's episode. I mean, it's
CFPB. Let's go.
I mean, are you excited about today's episode?
No, Dustin. You know I don't give a shit. I do not care. But I'm excited to hear.
Will you placate me? Will you ask some hard-hitting questions?
Yeah, as it relates to the Consumer Financial Protection Bureau and what's going to happen in the next 3 to 6 months.
Yeah, because here's my take, and we could almost cut the audio off as soon as I'm done with this. Okay, none of us truly have a say for another 18 to 45 months.
Even if you vote, you don't have a say. Let that sink in.
Well, correct. Let that sink in. And what it is what it is, and the hand that we're dealt is the hand that we're dealt. So we are going to play both sides of the coin. We will do devil's advocate, the pros and the cons, and I do want to have a healthy discussion.
Okay.
Because we do need to be aware of the world that we live in is getting rocked, whether it's rocked in a great way, like rocked me like a hurricane, or rocked like, holy shit, that was Hurricane Milton and that was devastating. Either way, we will be rocked by impending changes. But what do we coach and teach about change?
Nothing changes if nothing changes. You have to learn and to embrace or fall by the wayside like an old turd.
Yes. So if nothing changes, change is good. Change isn't always fun. Change isn't always smooth. But if we didn't like certain components of the way things were, By making changes, we're giving ourselves an opportunity for betterment. But I'm not saying that every decision is going to work out the way it was intended. And what was intended to be a decision based on betterment could end up being a decision based on things being worse. That's the great unknown. What I want this episode to be, just like the other 500 plus episodes we've done, it just makes you say, right? It just makes you think a little bit and understand that there are pros and cons to all decisions. And those that were elected are going to slide in and make decisions that they think are going to help them to stay richer, stay more powerful, and they're going to fool us into thinking it's what's good for us. And by the way, that's not this administration. That's my take on all administrations.
It's called the world as we know it.
And that is not decades and not centuries, but millennia, right?
Eons, Dustin.
Eons. It has worked that way. I'm sure if we could go back and talk to the T-Rexes and the Brontosauruses, they had a society that probably the rich and powerful did everything they could to make sure they stayed rich and powerful.
Even though I'm not rich nor powerful, I can understand where they're coming from.
One day, John. One day. In fact, speaking of one day, let's go ahead and give our sponsors some love so we can get rocking and rolling.
Oh, yeah.
So today's episode is actually sponsored by us truly, TLOP's
your boy.
Originator Coaching. And something that we're bringing to the 2025s are these 16-week boot camp style small master courses, not a master class. We teach one free master class every single month. In order to be a part of our master class, all you have to do is sign up for our newsletter. In order to sign up for our newsletter, go to our website, tloponline.com, and you can sign up for our newsletter, at which point you will be invited to these free monthly master classes. But a master course is small group. We have one called Launch. We have the other one called Boost. Boost is specifically for producing branch managers. In fact, you and I next week or the week after are going to release a podcast episode where we are going to teach specifically how to lead, manage, and produce at a high level. So that's going to be an episode mortgage specific and producing branch manager specific. But we have a 16-week boot camp that people can inquire about. They can be interviewed to see if they can be a part of it. So Launch and Boost are our first two 16-week boot camps. We currently have about 4 spots open in our Launch course, and we have 3 spots open in our Boost course. Both of these we are going to be starting in March, so that way we are done by July 1st.
Yeah.
For more information, go to the website, tloponline.com. But that is today's show sponsor.
Oh, yeah. I'm going to pat myself on the back for that plug. All right, let's get into it, Dustin. The CFPB. I'm going to read off your notes.
Can you read my notes, John?
Chicken scratch. Russell Voigt, or Vaught.
A.K.A. Russ.
Yeah.
Big Daddy Russ.
Yeah, Big Russ. Listen, he said some things that are really going to cause some ripples to go out throughout the industry. So you guys be on the lookout for that. And then the Office of Management and Budget. You guys, we got some real news coming out of there, so stay tuned for more insight coming soon in the next couple weeks. And then to close it all off, we have Architect Project 2025. The architect, one of those people I mentioned was the architect of Project 2025, not to be confused with Project Blue Book, which investigated UFOs in the late 1940s after the Roswell crash. So there we have it today, today's episode. If you guys have questions, we'd love to hear your feedback. Comment if you're on YouTube. And if you're not following us on YouTube, please follow us on YouTube.
All right, you ready? I like that. That was pretty good. So as I teased it, here we sit. It's February of 2025. And we've had the Secretary of the Treasury, a.k.a. Scott, right? Our guy Scott.
Okay.
Actually, I was a fan of that pick. I was a fan of Trump's pick for the Secretary of the Treasury.
Hold on, let me get this. Secretary of the Treasury, let me guess, he used to work for Goldman Sachs?
More than likely, a lot of them do come from investment banking. Yes. Yeah, this dude is a billionaire.
Either that or oil.
What's that?
Either that or oil.
Possibly, but yeah, Scott Bessent is the guy's name. You can Google Scott Bessent, but nonetheless, the director of the CFPB, Rohit Chopra, was terminated, and that was expected, right? I think you and I talked about that God, do you remember what episode that was that we talked about that? Like 490 something,
49 or something.
Yeah. So we did, months back, it was a whole entire episode regarding will Elon Musk shut down the CFPB? And Rohit Chopra was the most recent director. He's not the only director. We've had Mick Mulvaney, we had Kathy Kraninger. Who's the guy out of Ohio? Doesn't matter now, but he was the original, like the OG head of the CFPB. And Chopra did a good job, in my opinion. Like no one person does a great job always. Like, I don't care what your industry is, school teacher, cop, firefighter, politician, professional athlete, mortgage broker, like none of us do a great job always. Our branches always can use improvement. Not every decision goes exactly the way we intended it, and we can't do all things at once. We have to pick one thing, do it well, and move on. Okay, so Rohit, I felt like, did a good job in his position, but the CFPB, as it stands, has been a very controversial department of the government. It's a regulatory body, think police, of financial services, and it's been a bit polarizing since it was founded some 15 years ago. So just know that when the new administration came in, one of the first heads to roll was Rohit Chopra. And then Chopra originally was going to be, who's going to cover this department? Well, let's let Scott do it over at the Treasury. Well, Scott quickly looked at it and said, look, I can't do this. I got bigger fish to fry. So let's go back and find our boy Russ. Russ was a part of the last administration, not the Biden administration, but the Trump administration. And Russ is used to heading up the Office of Management and Budget, or the OMB. You down with OMB?
Yeah, you know me.
There you go. Obviously, you're not those. Management and budget. What part of those two words do you like least, John? All of them, right? All of them.
That's a great question. What do I hate worse, the B word or management? Management, definitely, because I'm learning to budget.
Okay, there you go. So Russ, and it's VOUGHT, Vought. It's not Voight, because Voight would have an I in it, but I bet it's Vought. Yeah. So Russell, aka Russ, Big Russ, he played the role of the head of the Office of Management and Budget in the first Trump administration. He's now back for round 2, but in the interim, he was one of the architects of Project 2025. And here's what I can tell you about Project 2025. I'm sure there's some parts of it that I can get behind. There's some parts that scare the living shit out of me.
Give me 2 examples, because I haven't read it, nor will I.
The civil liberties, it reminds me of Handmaid's Tale. That's what it reminds me of. I'm not down with that. Like, I'm just not. I'm sure there's other aspects that, a proper debate with the right think tanks in the room to lay out the pros and the cons. I could probably make a decision that would potentially go with some of what is written. And Project 25, it's like a freaking manuscript for resetting the U.S. government. It is extremely conservative, and I bet it's thousands of pages. I haven't read it. Don't care to. But, it's just good to know that this guy, Russ, was an architect of Project 2025. Okay, so now he's in the Office of Management and Budget, and all of a sudden they're like, hey, somebody has to head up the CFPB. Rohit's out. Hey, guess what, Russ? It's you. Scott doesn't want it. We're going to put Russ there.
There you go.
So Russ slides in. First thing he does, shut down the website. Second thing he does is cut off the funding, tells all the employees to go home, work from home. We don't need you. And suspend all activity. And there's certain people that are cheering this. Woo-hoo, this is freaking amazing. Because who wouldn't want to know that I'm going on a field trip and I'm driving from Orlando to Charlotte because maybe I'm stopping by Greenville. I'm going to go to the Lazy Goat and I'm going to attend this badass TLOP event in Greenville, South Carolina on February 19th.
Hell yeah.
And I know there's no cops. There's no FHP. There's no state troopers on the highway.
Well, that sounds cool and dangerous at the same time, Dustin.
Yeah, hell yeah. Well, that's what life's going to be like without the CFPB.
Well,
right?
For how long? How long is a website down until IT gets back up? You know how that goes. Everybody's had that 404 error. So do we have IT working on it? Did you put in a ticket?
I'm pretty sure IT was asked to look the other way. Like, we're not fixing this website. So there's a lot of people like, man, this is freaking awesome. Screw those guys. Because, by the way, the CFPB from inception has had its flaws. From inception, right? And a lot of those flaws were regulation through enforcement. We've talked a lot about that.
I remember that
throughout the years when we described the CFPB. That means they never had clear, defined rules. They had very vague rules. And then when financial institutions, mortgage companies would say, hey, is this within the confines of your rules or not? They would say, yes.
Okay.
Yes.
Great.
Okay.
Yes.
And then you would go do something. They'd be like, psych, that doesn't work. Now we're leading with a $10 million penalty.
Right.
That, not so good. However, putting greedy financial professionals and institutions in check is a good thing. Checks and balances is a good thing. Discipline is a good thing. We need some guardrails. So now that the CFPB is out currently, does that mean no guardrails? And what I'm here to warn everybody about is it's not going to be that simple. It is not, there is no policing. It's going back to the wild, wild west. Because guess what this means? This means that each state is going to step up and they are going to enforce and regulate. You see, prior to CFPB, it was left up to the states. And some states did it really well. Some states did it pretty lackluster. And there wasn't any federal oversight. And a lot of people could state that's why we had the financial crisis of 2008. That lasted through 2011. That was more it was the most detrimental thing to happen to the U.S. economy since the Great Depression, right? That time period for those of us that lived through it. So all of a sudden, the CFPB is gone and people want to celebrate it. They want to give Russ a high five, dap him up, give him a pat on the back, say thank you. But I just want to warn you. If you're running a company, that company lends in multiple states. Now, instead of having one regulator, you now have 7 regulators. Is it easier to have 7 sets of rules or 1 set of rules? I would tell you 1 set of rules, right? So all of a sudden, we need to potentially take a step back and ask ourselves, is this what we really want? The CFPB is gone. Woohoo, that's amazing. I can go do Wild Wild West days. Cool, what does that mean? You want to start, paying ratings agencies to give you a good rating, even if the data doesn't state that you're that type of company?
Yes.
Okay, cool. Until when? Until you get caught?
Yeah, until we get caught with our pants down, and then we have a PR press junket, and then, look over here, wait some time, and it'll pass over until we get caught again.
Yeah, because you think nobody's going to be looking?
Everybody's going to be doing unscrupulous things, so we just hope not to get caught doing the worst of the worst, that's all.
Okay, so do you want to start, legitimately paying realtors and builders money to refer you business? Like, straight up, you know what? RESPA Section 8 doesn't exist, and I now want to literally say, John, you're a realtor. Every time you refer me, I give you $100.
Yeah, it sounds exactly what happened in college football. Like, oh, you want to go to Tulane? Here's $10 million. Come over here to Texas.
And is college football better or worse?
I don't know. We just installed it, and it seems to be okay, but the playoffs were kind of a shit show, so give me a couple more years, and I'll let you know.
Yeah, I think most people would tell you it's not better, but it's on its way to maybe getting better.
Right.
It's on its way to potentially getting better, but the first 2 years and the next 3 years are going to be shit shows. So we have to really second guess what it is that we're asking for, because let me just broach this topic. If it truly is Wild Wild West days,
yes,
then he or she with the most money is going to win.
Correct.
Okay, cool. So if you're a local brokerage and you're cheering the fact that you don't have any oversight anymore, and you can do things the way that you want to do. I want to comp my LOs this way, and I want to. Cool. Guess what happens?
What happened?
What happens when Rocket wants to just start doing it? What happens when Bank of America just wants to start doing it?
Well, yeah, clearly
you don't have that type of money.
We don't, but so you better be doing an unscrupulous shit while the teacher's not watching now over the next 2-3 years before everybody catches wind.
Yeah, until all of a sudden the state steps up, regardless of your state, California, New Mexico, Texas, Florida, New York, Illinois, some states more than others, right? I would guess Illinois, and I would guess that New York, their shit's going to be dialed in tight AF. I'm thinking Florida currently, Texas currently.
Do whatever you want.
Potentially, right? Potentially. But it's hard to run a national company when when you're being audited and regulated by 13 or 15 or 17 different entities. It's not just states. It may be the actual investors now feel like they have it upon themselves that they have to do some of the policing themselves. Like it's not as easy as I think a lot of people who want to champion it. Like when I say champion it, it would be the dismantle of the CFPB.
Like, did they dismantle? Like, when you say dismantle it, like, did they just put it on pause, or they just like straight up like the building's gone, it's been leased out, it'll never come back? Like,
well, no one knows, right? No one knows. I mean, look at the tariffs. We're gonna tariff, and then 24 hours it was like, psych, head fake. Like,
is that what happened?
Yes, this is the administration of chaos currently. So who knows? And that's by the way, that's strategy, right? That is strategy.
Strategery.
Like, it's like, look, if I can confuse them. And them could be the media, them could be the voters, right? Them could be the members of Congress. If I can confuse them by just throwing 9 or 12 crazy ass actions, and I can get the courts moving in one direction, I can get the voters looking in another direction, I can slide in the 2 or 3 things that I need to do.
Yep.
Yes. I mean, it is a mad genius, and it's a strategy, and it's probably a strategy that's worked for decades, and it's a strategy that's being deployed. So none of us truly know. What we do know is that funding's been cut off, that all activity has been suspended, that Chopper has been terminated, and that was anticipated, by the way. There isn't really anybody in charge, so they went ahead and put Russ Vought in charge, but he's actually also in charge of the Office of Management and Budget. And this dude was one of the key architects of Project 2025. Like, these are things that we do know.
So what? Okay, so let's hypothetically think like it's 2 years from now. What would be like a worst, like a bad scenario? Could you imagine like a brokerage that used to lend in all 50 states now only lends in 4 because of all the regulation? Like, give me a hypothetical scenario that you could foreshadow happening. Not saying it will.
Like,
that would affect a loan originator coming into work on a Monday being like, shit, I miss how things used to be in 2023 or whatever the hell year it is. You know what I mean?
Yeah, what would that look like? It would look like the biggest companies having their having the best real estate agencies on payroll, right? Like, just straight up, hey, we are a national lender. We want you to refer all of your buyers to us. We're going to pay you just straight up, right? No more backdoor, no more like, putting up fences we have to jump over or walk around, which is what the industry was doing. All of a sudden, we're doing away with loan officer compensation altogether. Now, don't get me wrong. I came from that world. I will make an argument that way was better. The world in which I, as an originator, got paid based on the loan program I gave someone, based on the interest rate I gave somebody, that I feel like 80% of consumers won when that happened. 80%, that's Pareto's principle. 80%, it was better for them. It made lending cheaper to them. Originators lost because they made less money. Like, I have the data. I can go back and tell the originators, when you get to choose the interest rate that your consumer receives, and in a reflection of that rate is going to be your comp, all of y'all made 25 to 35% less per transaction. But the consumer won. Now, the difference is there's another 20% they got taken advantage of. They lost, and sometimes big time. There were originators putting people, I don't care if they were old people or young people, if they're Hispanic or white, just let's say people, in loan programs that was the worst loan program. Somebody knew that a conventional loan with 5% down was a better loan, but they put them into an FHA loan because it paid an extra 100 basis points. Somebody knew that 62-year-old retiree couple buying in the Villages didn't need to go on a negative AM loan, but we had this awesome loan at a 1% interest rate, and I could get, back in the day we called it overage on it, so I'm going to slide them into that loan program, right? It wasn't the best loan, but it was the highest commission. And because of that, there were some people that truly got negatively impacted. How about this? I go back to the Wild Wild West days. There was no 20-hour course. There was no NMLS test. Today, we at least have a barrier of entry. We have a way of weeding out people from being originators. Mm-hmm. I'm not saying the way is perfect. I'm not saying that everything you learn by getting your MLS will make you good. It won't. It's a barrier of entry. It gets you into the club. It's like your admit one for free. You still have to tune into TLOP, get coached by TLOP, go to conferences like MortgageCon if you want to actually learn how to operate and be successful in this business. But going back to the wild, wild west days, that wasn't good. Like literally, if you could fog a mirror, meaning I put a mirror under your nose and it would fog up because you had a pulse and you were alive, we'd let you come in and originate loans. And then we'd let you pick your comp based on the loan program and the interest rate you sold to the consumer. Man, I don't know if I want to go back there. I don't think I want to live in a world where it's like, hey, whoever pays that RE/MAX office or that EXP office the most will get their referrals. It's a true straight up pay for play. I don't think I like the fact that we could live in a world back in the day where ratings agencies were on the take. They were getting paid. They were getting paid by Wall Street to give their investments a grade A rating when really they were maybe a B- rating.
Yeah, that's how peer reviews in academia work for like drugs and other things, Dustin.
Is it really?
Yes.
Yes. Like we need to do better. So I hope that this isn't a total dismantling. I hope it's a correction. It's a different way of doing it. It may be a less punitive way. Like the American people deserve better, and you can't trust big business. You can't. I work in big business.
Of course.
I've made a lot of money helping grow and run big businesses.
Yes, sir.
And I love the world that I operate in, but I want to let you know we all need checks and balances. You know why I got married? Because by myself,
you would have been floating in the Hudson, Dustin.
Total train wreck, right? Get a partner. She offers me some checks and balances. You know why she got married? Because her life would be no fun if she didn't have someone in there to make it more exciting.
Lifetime babysitter club is what she signed up for. She just didn't know it.
Yeah, no. So I think there's a certain level of like
all right.
balance.
Yeah. So give me and then we can end on this. We need to put a bow on this shit. What would you say is then could be like really good? Like blinders on. What would you say? Like, oh wow, it's really easy to get a loan through. It takes like 16 minutes. Like what would be?
No, clear, concise, easy to follow rules. Clear, concise, easy to follow rules, and then actual regulation. Like you F up and bam, you get hit immediately. We may only have 10 rules, and those 10 rules are black and they are white and they are crystal clear. And the minute you flub up, we're coming at you hardcore, like dad with his leather belt coming at you. Not like mom and go get a switch off the tree.
It was a wooden spoon for me, but yes.
Was it?
Yeah.
Did your mom break it over your rear end?
No. Hundreds of wooden spoons. We still have a wooden spoon from we shared it as from 1984. Hell yeah.
Yeah. You knew when dad got out the leather belt, you messed up.
Yeah.
You messed up. Mom told me to go get a switch. I was like, yeah.
I started crying immediately. Don't hit me.
So I think that's a world that we could operate in. Like, look, y'all have heard me talk about this. The mortgage industry has been blatantly violating loan officer compensation rules for the better part of the past 3, if not 5 years. Blatantly. And the CFPB wasn't doing crap about it. Chopra wasn't doing crap about it, at least not that it was published about and talked about in Housing Wire. Housing Wire did a great job of covering the topic, right? Shout out to James Kleiman over at Housing Wire. We discussed the topic on TLOP. I think I ruffled some feathers, potentially with my old employer, with how vocal I was about my thoughts and my concerns about blatantly violating loan officer compensation. But the industry does it. The entire industry, broker, IMB, across the board, and the CFPB didn't do crap about it. So, you know what? Like, maybe they do need to get reworked, but I don't think they need to be abolished. And I don't think it's a great thing that they could be abolished, because I do think they have their place, and we all need to have a clear set of rules that we all follow by, and the consumer does win. Now, the CFPB, maybe this will be what I find my big bow on. They're going to want to rest their laurels on, we've given back $22 billion to consumers. I've yet to meet a consumer that was like, bro, CFPB hooked me up. I was wronged. Right? Most times it's like, oh, I just got $8 in the mail from Apple.
Yeah, I got a random check. What the hell is this? Sir, you were part of an $8 billion lawsuit settlement. Congratulations.
Yes. Like, but at the same time, although me as the consumer didn't win on that instance, you know what I win? I win because it puts the fear into that next company that wants to put $1 in front of a human. Right? Think about that. Like there are big businesses, tobacco, the food industry, just about any industry will put money ahead of humans.
Yeah, we don't need people anymore. We have all of your data. So once we have all of your data, we're going to use all these AI algorithms to upload them to all the robots that are eventually going to come later in 2025.
Yep. And I think regulatory bodies like the CFPB should promote small business. They should promote local mom and pop, and they promote it by not allowing the rich and powerful to bully their way into becoming more rich and more powerful through antics and strategies that only somebody who is already rich and powerful could deploy. And they do so typically with regulation, but we could do without regulation by enforcement. We can have clear set rules, at which point everyone understands those rules. And then when you F up, then the gauntlet gets dropped, the leather belt comes out, you get your ass whooping. Then we broadcast that ass whooping to everybody so we all know, hey, don't do that. And if you do that, this is what's going to happen to you. So we're going to want to watch this. Like, stay close to it, but at the same time, don't lose sleep over it, because there's nothing you, John,
thank you,
me, or anyone else can do about it.
Nothing you can do.
It is what it is. Okay, the closest we can do, we can become a part of our trade organizations. We can show up in D.C. and advocate. We can reach out to our senators and our congressmen and women. We can vote, right? Like, these are all things that we can do, but all of that takes a collective effort and it takes time. So whatever's going to happen is going to happen over the next 20 months. And then from there, we can participate with Bob Broachman and the NBA. We can ask them to go lobby Congress and on our behalf. We can show up to the polls and vote, whether we want to vote for more or vote for less. We get a vote, and we can kind of let the chips fall where they may. But please don't lose sleep and start making these crazy corrections, because it's not going to be as great as you think it's going to be. It's not going to be as detrimental as you think it could be. It's going to be a lot of the same, just done differently. And be on the lookout for your states, because now all of a sudden the federal government is telling the states, hey, this is a state issue.
Bolo.
Now you go from having one regulatory body to 50 or to 5 or to 3, depending on how many states you as a business currently operate in, and only time will tell. That's all I have to say about that, John Coleman.
That's fascinating shit, Dustin. I can't wait to see where the chips fall with the CFPB and how this industry rebounds from the new news.
Yeah, and you know what? I can't wait to see everybody in Greenville, South Carolina on February 19th. I cannot wait for March to come around, because I'm going to head up to Louisville, Kentucky, and participate in a Mortgage Bankers Association event. In April, we're going to do a Iowa Mortgage Association event. And then later in April, we're going to go to Arlington, Texas, and participate in Texas MBA's event. That's going to make our 9th event in 2025. If you're interested in having me or John and I show up to your event, participate, give a keynote, conduct a 4-hour workshop like we did for our friends at Mid-Florida Credit Union, go to our website, tloponline.com, where you can fill out a media inquiry and you can connect with me or a member of my team to discuss how we can continue to bring value to you and your associates. He's John Coleman. I'm Dustin Owen. That's all the time we have for you today, but we do look forward to catching you on the next episode. Peace.